Hello and welcome to Green Finance Focus, where we bring you in-depth conversations with some of the world's leading experts in the decarbonization of the economy and the role finance plays in that transformation. My name is Dylan Zagati, and I am currently an undergraduate student at Yale University and a member of the Yale Center for Business and the Environment. I'm here with a very special guest, Dr. Gautam Jain. Dr. Jain earned his PhD in Operations Research at Columbia University. He's a senior research scholar at the Center on Global Energy Policy of Columbia University's School of International and Public Affairs. He currently focuses on the role of financial markets and instruments, including thematic bonds and carbon markets, in the transition to net zero emissions, particularly in emerging economies. So with that being said, hello, Dr. Jain, and thank you for joining us today.
Thank you, Dylan. It's very nice to meet you.
We're very happy to have you. So today I would like to discuss your experiences and thoughts on thematic bonds as instruments in the transition to net zero emissions. So to start, can you start off by telling us a little bit more about your work as a senior research scholar at the Center on Global Energy Policy?
Sure. As you said earlier, I focus on the role of the financial sector in the transition to net zero, so essentially broadly for energy transition, and with a focus on emerging and developing economies. So effectively, I look at thematic bonds, I look at carbon markets, I look at transition assets, which is oil and gas assets, which we will need through the transition period.
Yeah, very interesting. And today I'd really like to focus mainly on thematic bonds. So with that being said, can you briefly describe what thematic bonds are, and even more specifically, what are green bonds?
Sure. So this is a class of bonds that was created in 2007. EIB issued the first bond, which at that time was called the Climate Awareness Bond. And that kind of set this asset class in motion. The following year, in 2008, World Bank issued the first green bond. So essentially, there was already a demand for sustainability investing, and they were both EIB and World Bank were reacting to this demand from investors for sustainability investing, and that's why they created these instruments. So they were launched in effectively 2007. It took a number of years for the asset class to actually pick up. The initial issuance was primarily by multilateral banks, and it took a while for governments and corporates to come into the market as issuers and start issuing these bonds. The main pickup happened in 2014. This is when green bond principles came about. So this is how green bonds started taking off because these principles helped lower the risk of greenwashing, which is what investors were primarily concerned by. Essentially, the green bond principles have four components. They talk about use of proceeds. So the proceeds of the bonds are ring-fenced for specific projects. And in the case of green bonds, they are ring-fenced or earmarked for green or renewable projects. And then any issuer who does issue those has to follow that. In addition to that, has to describe the process of management and selection of projects. They have to describe how the proceeds will be used, the proceeds raised by issuing the bonds. And then finally, they have to do reporting on an annual basis of how essentially the progress of the project. There's additional recommendations, which is getting second-party opinions about the framework and the projects, as well as getting third-party certifications for the projects. So all these things combined help lower greenwashing risk, which is what the concern or a big concern of investors is when they invest, assuming it'll go for green activities, but that may not be the case. Coincidentally, a second event that happened in 2015 was, of course, the Paris Agreement. So as a result of that, many countries had their NDCs, and essentially the demand for investing in renewable projects took off. And with the demand, the investment side came in, and that's how the market started taking off. So at this point, the overall market is about $3.5 trillion of total issuance to date as of the end of 2022. Green bonds make up about 60% of the total. Green bonds are the ones that were first initiated. Since then, other types of bonds have been issued following this similar concept. So there's social bonds, which focus on social projects. Then there's sustainability bonds, which have a combination of green and social projects. Then there are sustainability-linked bonds, which are slightly different because they're not user proceeds. They are what are called KPI bonds, so essentially key performance indicator bonds. So instead of the funds of the bonds being ring-fenced for specific projects, they are meant to use the proceeds to meet certain predetermined targets, which may be related to emissions, may be related to some social indicators, and so on. So maybe I'll stop there and let you ask follow-up questions because I said a lot of things in there.
No, that's fantastic. Great description of thematic and green bonds. So how do thematic and green bonds add value to all participants in this kind of financing?
Sure. So if you think about the overall investment that's needed for the energy transition, the estimates that we are looking at are of the order of $5 to $7 trillion per year. So it's a massive amount of investment that's needed. IEA estimates that the current level of investments that's happening is about 1.4 trillion. So compared to what we need, it's only a fraction of what is being invested. So clearly we need to increase the investment many folds. Now, it is important to understand that one of the few asset classes that allow for this kind of investment is the bond market. The total size of the bond market is about 130 trillion, which is basically the total stock. In terms of flow, every year between 25 and 30 trillion of bonds are issued by governments, by corporates, and so on. So when you think about the numbers I gave you earlier, 3.5 trillion was the total size of thematic bonds. Roughly more than 2 trillion of that is green bonds. And you can see they are very small component of the market as of now. In 2021, we had record issuance of about 1.2 trillion of thematic bonds. Last year, obviously, was a very difficult year for bond markets. So it dropped to about 800 billion. If you think about the number I was telling you earlier, the investments that we need, which is 5 to 7 trillion, already these bonds are making up, let's say, between 1/6 and 1/7 of what is needed. And given the flows and the stock numbers I gave you, there is a lot of room for growth. So if hypothetically the issuance of green bonds grows 2 to 3 times, so if we start issuing something like 2 to 3 trillion a year, which is not unreasonable, given that the total issuance of bonds is about 25 to 30 trillion, it'll be about 10% of the total. So it does not seem like a very large number. However, of the total that's needed for investments in renewable projects, it's a large number. It's almost half of what's needed. So they can make up a big portion of of the investment that's needed. So this is one market that has the potential to help finance the transition and a significant portion of it.
Yeah, so we've talked about various, thematic bonds, I guess mainly green bonds, but do you see one of these bonds as having more potential than the others for the net zero transition?
So I think green bonds, they make up 60% of the total for a reason. They are the ones that are seen by investors as the most appealing. They go directly, the investments go towards renewable projects. So it's much easier for investors to be assured of there not being greenwashing risk, as long as they meet green bond principles and there's a second party opinion and a third party certification. So clearly that is the asset, within this asset class, that's the kind that's become the most popular. Relative to green bonds, social bonds, sustainability bonds, and sustainability-linked bonds are relatively new. They came about a few years ago. So clearly, green bonds has a first-comer advantage. But even otherwise, there's different characteristics of the other bonds that in general makes it a little bit more complicated for investors to completely buy into. Of course, there are reasons why sustainability-linked bonds are appealing to issuers. Because, as I said earlier, the proceeds are not tied to projects. So for issuers, it's much easier to work with those because for them, they can use the proceeds as they see fit in order to meet a target. But again, on the flip side, for issuers, that effectively adds some greenwashing risk. So therefore, they see a little bit higher risk in those bonds versus green bonds. Social bonds are obviously targeted towards social projects, and that depends on a specific country. Typically, social projects are taken up not by corporates, but by governments. Because if there is a hospital to be built or a school to be built, or there has to be access to clean water for a certain population, it's more likely that the government will go on that endeavor. And then the other issue that happens is in social projects like these, there are no obvious sources of revenues. So remember, these are bonds, so they have coupons that need to be serviced. In a green bond, if it's, let's say, it financed a solar farm, which is then linked to a power company, which then generates revenue by selling power to consumers. So therefore, there's a natural stream of revenues. On the other hand, if you're building a school or hospital, there is no natural stream of revenues. So it makes it a little bit harder to sell. Now, in terms of the transition, obviously, because we're talking energy transition, the green bond, again, is the most obvious choice. Sustainability bonds have also become important and have also received a lot of attention because in many cases, in many countries, the number of projects cannot be so large to meet the size requirements of a bond. So when you want to issue a bond, you want it to be liquid, you want it to be part of an index for investors to buy that bond. So what that means, it has to be typically of the order of, let's say, 200 to 300 million at a minimum size, preferably $500 million to $1 billion at a minimum. And for smaller countries, let's say countries in Africa, to have so many projects that match that size is difficult. So sustainability bonds has the advantage that you can combine some projects that have specific green focus versus with social co-benefits, or in some cases have some social projects with green co-benefits. So it makes it a little bit more flexible. But ultimately, I would say green bonds are the ones that are receiving the most attention, and I expect that to be the case going forward.
Yeah, that's what I've seen, at least in my own research and observing. But yeah, so you mentioned kind of developing economies, smaller countries. I know that's a really big area of focus for you, an area of expertise. So in what ways can we aim to increase emerging market and developing economies a share of the global, thematic bond market?
It's a great question. That is actually one of my areas of focus. In one of the papers that I wrote, this was in December, what I identified was of the total issuance that has happened in green bonds, so total about 2.2 trillion, less than 10% comes from emerging market and developing economies, excluding China. So what that means is just about 200 billion has been issued by emerging markets and developing economies. Now, when you look at the issuance in local currencies, so not issuance in dollars or euros, but in local currencies of each of these countries, that share drops to 3%. So it's very, very tiny. To me, compared to the needs of these countries, going back to the numbers I was citing to you earlier, of the total needs of, let's say, between 5 and 7 trillion, the estimate is roughly around 1 trillion, what is needed by emerging market developing economies, excluding China. And the range of that is, when you include China, somewhere between 2 to 3 trillion. So a big portion of what's needed is needed by emerging market developing economies. And that's just for the mitigation efforts. For these emerging economies are also the ones that are sort of at the epicenter of climate change. So what that means is they are already feeling the effects of climate change much more. And we saw that last year with the massive flooding in Pakistan, for example. So they're already kind of feeling the effects. So as much money as they need for mitigation, they also need to invest for adaptation, because climate change is kind of already impacting these countries quite severely. So when you start adding those numbers, they become quite large for emerging market and developing economies. And now when you look at these numbers as a ratio of GDP of these countries, which obviously tend to be small, those numbers become even larger, especially when you compare to developed economies or advanced economies. So clearly the need is very high. And so we need to look for ways to increase that share from 10% of the total or 3% when you look in local currency terms. And that's my area of focus, and I'm looking at ways to do that. Several impediments that I have and others have identified. One is I was describing to you green bond principles earlier, but for any successful issuance of green bonds, countries need to show that they'll abide by countries or corporates need to show that they'll abide by the green bond principles. So essentially, they need to establish what is called a green bond framework. They need to have a taxonomy of projects that can qualify or can be the ones targeted by the proceeds of green bonds. Now, creating those is not an easy task because it needs intragovernmental coordination, which for many countries is more difficult. In general, for any country, it's difficult, but especially for emerging and developing countries, it can be quite complicated. And it also involves, in addition to the complication or complexity, it will also involve some cost, both in terms of time as well as money. So when they see all this, it becomes a big sort of a hurdle to climb. That's one issue. A second issue is, which is what I was touching upon earlier, is for many of these countries, they prefer to issue bonds in their local currencies. They don't want to issue in dollars because it creates an asset liability mismatch. And many of these countries have suffered crises in the past, mostly in the 80s and 90s, because they had a lot of dollar debt. And when the currencies depreciate, that burden becomes very extreme for them to manage. So to avoid that, they would prefer to issue in local currencies. Now, the problem is most of the demand for these bonds comes from developed economies because the ESG funds, sustainable funds that are growing very rapidly. The problem is that most of these investors seek dollar or euro denominated bonds. So there's a mismatch between the demand, which is growing and probably should continue growing, and the potential supply, which wants to come out in local currency. So we need to figure out how to close this gap. Another issue is for many emerging market countries, there is no liquid market. So essentially, they don't have functioning capital markets. So for those countries, it's particularly complicated. Some countries may have functioning markets, but they're small and illiquid, or there are a lot of regulations that's involved. So for investors to buy bonds in the country may be much harder than it seems. So those are things that countries can ease up a little bit on their end to bring more investors, international investors on board. Finally, I mentioned projects. So obviously, as I said, the size of the bond has to be it has to reach a certain threshold for it to be included in indexes and so on. So you need a certain number of projects. That is an effort that's needed to sort of line up all the projects and then be able to issue a bond saying that the proceeds will be used for those projects. So all these are complications. Some of these can be managed, and those are the issues that I'm working on and hope to be working on going forward.
Yeah, so how do you see the markets changing for green bonds in both developed nations and developing nations going forward? And I guess given the current state of how the bond market is operating.
So yes, last year was a difficult year for bond markets. Interest rates went up everywhere. Inflation globally went up as we came out of the pandemic. As a result of that, it made it even harder for even developed countries to issue bonds. And it became much more difficult for some emerging economies who ended up are either in some form of debt restructuring, debt default, or basically debt crisis. So it has created its own set of problems that many smaller countries mostly are dealing with. But beyond that, assuming, when we start looking countries that are not in that situation, for those, this is a market that should continue to be there. In fact, when you look at the issuance, last year, as I said, it dropped a little bit from 2021. So from 1.2 trillion of total issuance in 2021, it dropped about 800 billion. But when you think of this in the context of the market environment, it's actually not a bad outcome. And when you look at the flows data, which is a fund flows data, what it shows is also sustainable funds, ESG funds, and so on, did not suffer as much as conventional funds did in terms of outflows. Some of them actually ended up with net inflows overall. So those were positive factors. Obviously, these are issues that need to be dealt with, especially the increased indebtedness of many emerging economies. But I don't think it's a long-term phenomenon. Already rates potentially from next year on could be going lower. So maybe we are past the worst. And if we are, then the potential that I was telling you earlier of this market to continue grow should reassert.
Do you see any possibility of new types of thematic bonds being issued in the future? Like, I know green bonds are fairly recent, so are sustainable bonds. Like, are there any ideas of other bonds you could see?
Sure. So I definitely see the potential of other bonds. This is a market that's still very new. This is an asset class that's kind of, like I said, did not exist 15 years ago. But one of the things that the financial markets are good at is innovation. And so I see the case for more innovation. To give you an example, the sustainability linked bonds that I mentioned, which has a KPI bonds, the way they work is, so the issuer agrees to meeting certain targets. And if they don't meet the targets, then the structure so far was that the coupon will increase. So instead of paying, let's say hypothetically, they pay 5%, it'll go to 5.25% if they don't meet the objective. But if you think about it, that's a moral hazard problem. Because for an issuer, their objective was not necessarily to penalize the issuers. Their objective was to for the issuer to meet certain sustainability targets. So in that sense, was not quite meeting the objective. So Uruguay last year issued the first sustainability linked bond that had both the step up and a step down feature. So in the sense that, if they don't meet targets, the coupon goes up, as the case with most other bonds. But if they meet the targets early or, basically overperform, then the coupon can drop. So there's already kind of in the structure of the bonds, you're already seeing innovation. But there could also be new types of bonds that could come about. Now, remember that, as you said, some of these bonds are very new. There's one type of thematic bond that hasn't taken off yet. And to me, that is actually pretty critical. These are transition bonds. So to me, this is an important asset class, but it hasn't really taken off. Their purpose is to sort of transform the brown industries to green. So if you think about high greenhouse gas emitting industries, if they can find ways to lower those emissions, that's an important. So if they are able to raise funds to be able to install, let's say, CCS, essentially carbon capture, other facilities, that's very good. Somehow these are bonds that have not taken off yet because they've not been well defined what a transition as bond really means. I'm hoping that changes going forward, and that's one that picks up. Then there are different kinds of bonds that have come about. So for example, blue bonds that focus specifically on ocean or water or related conservation, marine conservation, biodiversity, marine biodiversity, and so on. But to me, I personally see them as sort of a subset of green bonds. So the different bonds that have come out, for example, similarly, they're like gender bonds that have come out for gender equality, but I see them as a subset of social bonds. So they're not new per se, but they're more targeted to what they're doing. So there are different kinds of innovations that are happening. Some are within the bond types that we already have, but there could also be new types of bonds that could come out. In fact, I'm almost assured that there'll be new types of bonds that will come out. At least there's a need for new structures. For example, the problems that are identified in the case of emerging markets with local currency versus hard currency, the difference, some bond that can take care of that could come about. So the different innovations can happen, very likely will happen.
So really, yeah, it's really just bonds will kind of adjust and will be put out based on the current, just what's happening in the world and what needs have to be addressed and financed. So yeah, extremely interesting conversation. I have one more question I like to ask everyone who comes on Green Finance Focus. That is, finally, what gives you hope for the future of society and its ability to address the challenges of climate change, specifically through the lens of finance?
I used to work in the financial sector for many years, and I dealt with emerging markets. I used to trade emerging market bonds and currencies. So for me, every year there would be some crisis, and it would seem like the worst crisis ever. But eventually you would get out of it, right? So to me, at that point, when we are in the midst of a crisis, it seems like the worst possible crisis. But typically, I count on generally people finding ways to come out of it. In the case of climate change, I am counting on innovation coming in to help, and not just innovation in terms of technologies, which is what we need. So, for example, battery storage, hydrogen as another source. So all these, I'm pretty sure that there's been quite a lot of advances there. It's just that the cost is still high. But if you look at the path of where, for example, solar or wind were a decade ago versus the cost now, cost has dropped. So you can see the path for those also of cost falling, and you cannot rule out new innovations that we don't know about, and they will come about. So to me, we should not just look at this problem as just being a challenge. It is also an opportunity. It's an opportunity to come out with new ways and new solutions, whether it's on the technology side or the financing side, like we were discussing. I'm almost certain that there'll be new structures and new bonds or other types of financing that'll come up, which will help deal with the problem. Again, for us to do that, it is important to continue to hammer that how important it is to look at this issue, to address this issue. And unless we do that, the incentive to come up with innovation won't be there. So the way to do it would be to target 1.5 degrees Celsius and use that as a target, as difficult as it may be to reach that. But unless we continue on that path, it'll be hard to get the right incentives in place for these innovations to happen.
Yeah, certainly. And to add to that, it will be also hard to get the innovations in place if we also don't have proper financing for such innovations and understand how important finance is playing in the role of a clean energy transition. And yeah, thank you so much. It was such an informative talk. And where can people find out more about you and your work?
So if you go to the website where I work, which is Center on Global Energy Policy at Columbia University, so you can find our website very easily. If you do a search for scholars, you can find me by name, and you can find links to all the papers that I've written there and the papers that I plan to write on or I'm working on. So that's the easiest way to see my work. I'm obviously on LinkedIn, Twitter, if anybody wants to connect there.
Awesome. Yeah, I'll link that down below. This has been amazing talk, so fun and informative, and I hope we can speak again in the future.
Thank you, Dylan.
Thank you.
Very nice talking to you.